Welcome back to episode number 12 of the Income Insights podcast. I'm your host, Denny Neithardt, and alongside me, we got Maciej Wenerski, who is head of loan originator due diligence at Income Marketplace. Maciej, thanks for joining the podcast and jumping in for Kimo today. Now, before we discuss how Income Marketplace is performing due diligence, maybe a couple of words, a quick introduction of yourself in terms of your personal as well as your professional background, please.
Hey, Danny. Great pleasure to be here. Thank you for the invitation. I'm Maciej Wenerski. I'm Polish. I'm the only employee of Income that works from Poland. My professional career started in EY, where I've been working for 5 years, partly in financial audit, partly in M&A, with a particular focus on due diligence. Uh, we've been doing not only financial institutions, but also regular companies in terms of DDD. Then I jumped into a Polish consumer lender company, Asa Polska, where I actually met Kimo, current shareholder of Income Company, and that was the time we've started our friendship, so to say. After a year of working in NASA, I was employed by a Polish tech startup. It's a very, very promising startup recently with operations in China, in the United States, and they want to become the first unicorn from Poland. So I'm still crossing my fingers for them. After 2 years working there, I was approached by Kimo and other shareholders to join Income Company, and here I am working already 4 years and I think 2 months.
Yeah, when I reviewed your LinkedIn profile, it says October 2020. So I think fair to say you're been with Income since day one, and obviously someone that can witness the entire journey that Income has been through so far. Obviously now my follow-up question would have been how the connection with Income Marketplace established, which you answered already. What is it that got you excited about Income? Have you been familiar with peer-to-peer lending before maybe and thought like, okay, this seems like an interesting player with let's say a bit of a different concept, or what got you hooked aside from the good relationship with Kimo?
Sure. So first of all, I've been always working in let's say financial market, and my 2 years break from that, which was this tech company, made me thinking that perhaps I should go back to a financial institution. And actually, Kimo had a really good timing approaching me, because that was the time I started to consider changing the job. The thing that attracted me most was it was already past COVID times, or we were somewhere in the middle of COVID times, and the shareholders they got really good idea of addressing the drawbacks that they've been observing on peer-to-peer marketplaces, in particular our main competitor, which is Mintos. And that got me really excited. On one side, that I will go back to financial business. On the other side, that it's a great opportunity to build something from scratch with the people I know.
And still got some excitement left after more than 4 years working for Income?
Exactly, yes. I mean, we are speeding up with the loan originators. Fortunately now, we are attracting more and more investors, and well, now the aim is to grow and to be profitable in the following months. So yeah, still excited.
Hmm. Now, before we jump into the details of how income is performing due diligence, maybe just a quick follow-up from your previous experience with ASA. Obviously, the Polish consumer lending market is quite, let's say, volatile, or let's say very dynamic in terms of regulations, certain restriction, interest rate caps. Is there a particular reason why ASA hasn't been a part of income yet?
Yeah, no, so that's a good question. No, we actually been considering Polish market for some time, and we've been talking with Polish consumer lender companies in the past. But unfortunately, the decision was from both sides that we cannot proceed because of uh, the regulation being in place in Poland. The biggest hurdle here is rate caps and cost caps that the regulator applied on loans offered to consumers. And unfortunately, that's the main part that kept us from onboarding any Polish loan originator. The other thing is that there has been introduced a new regulation that Polish consumer lenders cannot gather the funds from public. So that would directly also limit any possibility of cooperation with peer-to-peer marketplaces.
Hmm. Do you see an exception for, let's say, different license holders? Now, in particular, when I'm personally thinking about Twino, because there's different platforms that always had an exposure in Poland and had Polish lenders, but aside from Twino, that somehow managed to maintain their business operations in Poland, most of the other lenders have, exited the market, or at least they fund from their business operations from different sources other than peer-to-peer platforms. Do you know why Twino is maybe an exception in this particular case?
I'm not sure about the particular case for Twino, but I guess that the loan originators that have operations in other countries and SPVs in other countries as well, then they have more flexibility to be funded from different types of sources. Unfortunately, there are a lot of loan originators on the Polish market that don't have such a possibility. Thus, it's hard for them um, to go elsewhere to be funded. But I mean, there's a lot of institutional investors as well on the market currently being very aggressive as well, and they are able to accept lower rates. So I guess that the Polish market is not very attractive to us.
Hmm. Okay, fair enough. Then let's switch to, let's say, the main topic of this episode, which is the due diligence process at Income Marketplace. You being basically on top of that position. Maybe you can explain to start off, what does your job entail? Where does it start? Where does it end? What are your main responsibilities?
So I'm being engaged in the onboarding process from the very beginning, which is the intro calls with the loan originators. The reason for that being is that sometimes we need someone to evaluate already from let's so to say due diligence perspective. Is this product is going to be attractive on our marketplace and to our investors? Because there are a lot of loan originators coming to us with either too long product or too small production. And well, unfortunately, we cannot offer all of them everything because we know that the investors would simply not like it. So the first thing is I do pre-screening of the loan originators coming in, and then eventually, if we agree to move on and we see that the product will be attractive, then I start the whole due diligence process.
Hmm. And when you come up with the verdict of, okay, this seems like a promising lender that, ticks all the boxes. I'm assuming towards the end there's some sort of negotiation about the junior share, for instance, the advance rate. Are you also part of this? Do you give your recommendations? What would be a healthy range, or are you also towards, let's say, the end of this process? Are you there involved as well?
So I'm the person actually calculating the advance rate, and we present the loan originator with specific calculations. When it comes to commercial negotiations, if the loan originator wants to discuss the advance rate, then I'm definitely part of those discussions, as I'm the most knowledgeable person to answer their questions. But most of the times they don't have any objections to the calculations. What they want is to be clarified why we came up with such an advance rate and not the others. And usually they agree with the reasoning and accept that this is basically it.
Hmm. Okay, interesting. I would have assumed personally from the outside looking at it that there's a lot more negotiations because obviously, it has a, bigger impact obviously for their balance sheet and, like the volumes that they can then fund. But okay, interesting. So is there, when there's, let's say, not that big of a negotiation happening towards the end, do you, in your approach, do you calculate, let's say, with a certain buffer that allows room for negotiation, or are you like ultimately, look, this is what we can offer, this is our proposal, and as far as you can disclose this information, how much room do you leave for lenders to make some adjustments, let's say, more towards their favor or their liking?
Well, to be honest, my job is to keep the risk at bay. So I usually don't have any buffer for negotiations because this is the risk we calculate, and we don't want the investors to be hurt by let's say miscalculation, and then some of the loan originator not keeping up with the agreement. So there will always be some professional judgment embedded into the due diligence and the calculation of the advance rate. Thus, if someone convinces me that I made a mistake because I didn't see something, then I definitely will be more than willing to adjust the advance rate. But majority of the times, we keep the advance rate as it is and don't negotiate that. We do negotiations, of course, about the what shall be offered to the investors and what is the pricing of the product, but not in reference to the advance rate.
Hmm. Okay, interesting. Thanks for sharing. Um, Now, as I was speaking about it, obviously, when we discuss due diligence, it involves obviously, let's say, company sensitive data. I would assume that, there must be certain limitations, or I'm not sure if are there limitations in terms of certain criteria that you don't want to disclose, something that, you keep basically sacred for the sake of, income's unique due diligence approach, or are you really like full transparent and you can disclose any information now in the, let's say, upcoming minutes and questions, follow-up questions?
Well, I will try to say as much as I can, but I obviously cannot tell everything. Uh, when it comes to the data that well, we are gathering from the loan originators, is that we want actually everything in terms of the portfolio. So when we are looking at the performance of the loans, uh, we want to have as much details about a single loan as it is possible. In the European Union, we obviously cannot collect the personal data, but for other lenders from more distant countries like Latin America or South Asia, then they don't have any problem sharing that. We don't want those data, but sometimes I get it. Uh, and when it comes to the loans itself, everything that might help me with the analysis is welcome, and I do request that. So, what is the principal value? What is the interest rate? Are there any fees? Is there a VAT applied also on top of fees or interest, as it is in Latin America? What is the score that was attributed to the loan? What is the maturity? Is there any LTV? If the loan is secured, then what is the LTV? Uh, I also request for fraud attempts, if there have been any in the past, to see if it's a business that it's risky in terms of frauds. For example, in Latin America, it happens sometimes, but not a big scale. So everything that the loan originator can give me, with details of the loans, I ask for it. Uh, then when it comes to the performance, I obviously cannot see the performance if I look at the loan book itself only. So I ask also about the all the repayments that have been happening throughout the life of the loan. And once I get the full picture of the loans and the repayments, I'm able to compile an analysis that would show what was the performance of the loans throughout time.
Hmm. How do you verify the data that you receive from the lenders?
Sure. So first of all, I do my quality checks once I get the file, which is basically some logical tests. If I see that on a sample basis there are loans or values that don't seem logic to me, then I always ask about that. But the most important validation of the quality of the data is what we do, what we call it sanity and completeness checks. For sanity checks, we sample 30 loans and ask the loan originator to provide us with the loan agreement, with the bank statement showing us the repayments, and with a screenshot from the CRM system to show us that whatever has been given to us in a loan book and repayments is actually a real life example, that we see it in the documents or in the bank statement, that the amounts have been flowing through their bank account, and through that we assure that the data is accurate. For completeness check, we random sample a couple of months and ask the loan originator to provide us with a bank statement or a relevant document that would show us that the amount of loan that we see in the loan book that have been originated, let's say it was 1 million euros in January 2024. We want to see that amount of money be flowing out of the bank account from the loan originator. And with that exercise, we want to ensure that the data is complete, that the loan originator haven't been omitting a couple of the loans that been underperforming or completely non-performing, to show us that the performance of their loans are better.
Hmm. And when you run those sanity and how do you say,
Completeness.
completeness checks. Thanks. So when you run those checks, how often do you find inconsistencies that hint at, let's say, the lender tries to play you a little bit, or does it happen on a? What are the odds that this is kind of happening throughout the due diligence?
Yeah, so fortunately, I haven't met any loan originator that would intentionally be lying to us and providing the wrong data. Most of the times, there are some inconsistencies that I see that, for example, I asked for a nominal rate, and what they have included is effective rate. But this doesn't mean that the analysis is wrong. It only means that we need to adjust it a little bit. So to answer simply, no, that there haven't been any cases that there's we can call it a fraud intentional fraud by the loan originators.
Okay. You mentioned already a lot of data points that you look at. Can you maybe just quickly summarize, if it makes sense, what are the mandatory information, what are obligatory information that you want to receive to perform your due diligence?
So the mandatory would be well, actually, whatever we can receive from the loan originator is welcome. So if they want to give us more information than we request, then that's great. And by more information, I mean some specific characteristics of the loans. So sometimes they also provide if it's a male or a female. What is the age and so on. We're not interested in that, but if they provide us with that, then we are happy to take a look at. But it's more of a, let's say, out of curiosity, how they compare between each other. But what is a must to be delivered is as I said, the principal amounts, the maturities, the pricing of the product, the LTV, have the loan been sold to a third party, is it a fraud or not, and so on. Those types of information are crucial, and we always ask for that. Sometimes, unfortunately, we encounter, especially for smaller loan originators, that they don't possess some of the information, either because they don't store it or simply they don't have it. For example, there are a lot of loan originators that don't have a particular scoring model that would say that it's a score 1 or 10. Though it is a must from our side to be delivered, then we also accept some exceptions that they will not deliver that because they simply don't have it.
And then you adjust it inside of your assessment with a certain buffer or like a reduction of the profile, or what happens when you can't gather all the information that you would like to have ideally. So is there a certain threshold where you say this is like now ultimately then we can't do a proper assessment, or you just calculate it as a part of the risk profile then of the lender?
No, as you say, we always try to take into consideration that not all data has been delivered to us, and to apply an additional risk buffer to that. But I don't see any crucial information being omitted by any of the loan originators that we would need to apply as a strict risk margin, because the data hasn't been delivered. So I don't remember any loan originator that didn't deliver what we asked for. Sometimes the scoring, as I said, is the part that is missing, but some of the loan originators they treat a principal amount, the principal disbursed amount, as an equivalent to a score, because they simply say that the credit risk portfolio model says that this is the maximum value that the client can take, and in essence, that is an equivalent of scoring.
Can you? I'm not sure if you can quantify the data points that you look at for the due diligence. How many are those on average for a lender?
Well, this is the full loan book and full repayment. So I don't limit the analysis and the request to specific things. But if I am to say about the loan book itself, it's something like 20 to 30 data points that they require for each of the loans. Obviously, there are some that are not applicable because, for example, some of the loan originators doesn't have any agreement with a third party to sell the loans. That is already like 4 or 5 data points that are out of the question. Some of the loan originator, they offer a possibility to the loan to be refinanced. Then I need to know what is the first loan and the refinancing loan, just to connect them and to evaluate the full performance of those. So if the loan originator doesn't offer refinancing, it's already two or three data points less from the request. So it all depends on the product and on the loan originator and how many data points I require. For repayments, it's kind of strict that I need to see the amount of the repayment and what it has been split into. So principal, interest, fees, insurance premium, some other penalty fees, and so on. So whatever they have in the allocation schedule, then I do request that.
Hmm. Sorry if I'm asking a lot of numbers, because I'm always like try to, get the core of a topic mostly in a very analytical way. Another thing that would be of interest for me is how long does a due diligence process take? So if you can also give an answer for this.
Sure. So it's hard to say to tell one number that would summarize the length of the due diligence, because it all depends. And it all depends on the quality of the data being delivered and the responsiveness of the loan originator. I can say that on average it's something like 4 months only for the 4 weeks for the portfolio analysis only. But then there's also financial statement analysis and the sanity and completeness checks, which take a lot of time. So something like additionally three weeks. So in total, to onboard the loan originator from the risk perspective, it takes something like 7 weeks to complete everything.
Can you roughly make an estimate how many loan originators or how many lenders you have screened throughout those 4 years with income?
That I don't have any specific number in my head, but I keep every folder for each of the loan originator on my drive, and I think it's something like maybe 40 to 50 or even 60 loan originators that we've been screening. Obviously, there are loan originators that never got into the full scale analysis because in the meantime there was a change of heart from the loan originator side, and they decided to opt out of the process. But majority of them we came to the conclusion, and well, it was the decision either just to reject them, or the loan originator just didn't like the offer.
Obviously, since you are with income now from the get-go, and you are basically in charge of the due diligence process, can you share if throughout the years you have made some adjustment to your risk assessment, and if so, which did you do?
To the risk adjustment itself, we haven't been making any changes, but we've been doing changes to the timing of the whole work. So what we've noticed throughout the years is that we need to make the whole process much faster, just to offer more loan originators to the investors, but also to keep the so to say the analysis quality. And what we've decided to do is that we do the core analysis at the beginning and approach the loan originator with the commercial offer, and then only then we do it with an assumption that we assume that the quality of the data points is okay, meaning that loan originators approach us with good intentions to deliver us the quality data. Then once the commercial offer is given to them and it's accepted, we perform additional exercises. One of them being the Sanity and Completeness checks, but the other thing is also financial statements analysis. From the experience, I've seen that the financial statements analysis was never a showstopper for the loan originators, meaning that it never prevented us from offering eventually whatever we calculated about the advance rate. But we decided to move it after the commercial offer is accepted, just to speed up the whole process. And we just to make sure that we are clear about that, we never accept the loan originator without doing the financial statement analysis. We always keep a caveat there that it's in progress, but we don't see any specific risks being materialized so far. But if we see that the financial standing of the company is not good enough, then we reserve our right to either lower the advance rate or to opt out of the deal. But I think that there was only one case that we required an additional guarantee from the loan originator because of the financial standing. So the main changes were to the timing of the work, but obviously there were some additional tweaks to the analysis, because we're learning and we're getting to know new products. So whenever we have a new product, then we need to adjust the analysis, because obviously if we take a look, for example, at credit cards, which we are also looking at currently, then you cannot make the same analysis for credit card as you do for a loan that is disbursed in one time. So I would say that the timing is the main changes. And when it comes to the risk analysis, we just keep learning about the new products and adjust the analysis.
Early in our conversation, you mentioned Mintos being your main competitor. What would you say from your perspective? What is something that Income does better in the due diligence process compared to Mintos?
Well, judging by what I see on Mintos marketplace, I sometimes take a look there, is that there's not the DD part is not as important as it is to us. Majority of the loan originators, they have a skin in the game of 5-10%, and I don't see many of them being having less. But I didn't look at the whole marketplace. And in our case, we always calculate we have a junior share, not a skin in the game. We always calculate it on a case by case. So there have been loan originators that been given an advance rate, which is a reciprocal of junior share, of something like 60%, which is much less than what we see on Mintos. But because we see that the loans of those loan originators, they've been underperforming, but they were still willing to cooperate with us. So I guess that one of the things that we do much better is the analysis part that we do at the beginning to have our investors more covered from risk perspective.
Do you see lenders on Mintos that have been rejected by Income Marketplace?
Not yet. I haven't seen any of them.
Who would you say are your three favorite lenders on Income Marketplace?
It's a hard question. I wouldn't want to give one favorite loan originator, because I like all of them. But if we are talking about the loan originator that would be most attractive from the investment perspective, and just for my liking, what I've seen regarding the data quality and how I cooperated with the team is ITF from Bulgaria. They offer not only a great range of loans, starting from single payment loans, going through short-term installment loans, and ending up with the long-term installment loans and bigger tickets. And while there's a good range of maturities for them, they still offer a very good interest rate to be earned for the investors. So I guess that my all-time favorite is ITF. The second one would be Dana Rupiah from Indonesia. We already have a very good relationship for a couple of years, I think. And what I like with them is that they have really great volumes of good quality loans. And those are shorter loans, so the ones that being the most loved by the investors because they circulate faster. I think that those two are my favorites. But yeah, all of them are really good. And there wouldn't be on our marketplace if they weren't good enough to be part of the marketplace.
I think that was a good and fair political answer towards the end. That yeah, highlights your personal preference. I'm assuming then, therefore, you're also investing yourself on income.
That is correct. Yes.
All right. Okay, good. Well, thank you very much, Maciej. It was a very interesting chat that gave a little bit of an idea in terms of how due diligence is performed at Income Marketplace. There's a lot more that we could cover in terms of the junior share, how it's exactly calculated, and maybe a couple of other aspects as well. But maybe we take this opportunity then next time around. Thank you very much for joining the podcast today. Continued success with income. All the best, and yeah, good run
Thank you,
towards
Dennis.
the end of the year now.
Thanks.